now joined by Mr. H.M. Bangur, MD at Shree Cement, to make sense of the Q4 performance as well. Mr. Bangur, good morning. Always a pleasure speaking with you. First up, before I come to your numbers, sir, wanted to get a sense regarding this excise duty moves that we have seen. Now, for cement companies specifically, power and fuel forms almost 40 to 50% of the cost. With this cut coming in the excise duty on fuels, what kind of impact do you envisage?
The cut has come on power and fuel, no. It has come on the diesel, which is basically used for logistics. So our costing will remain same. Distribution cost, which is a separate subject everywhere written in distribution, so that will come down. And we feel that industry will be passing. Today is Monday, after Saturday it is the only second day. The passing that whatever cost reduction because of this has come, this should be passed on to the consumers. It is not a matter of our profit, we profiting from this cut.
Okay, point taken, Mr. Bangur. So what you're saying is that this will arrest the pace of price hikes that we were seeing as far as the cement sector goes, and you're actually expecting there might be a cut that might be announced on the prices?
Yes, should be within a day or two.
Could be the quantum of that cut, sir?
It depends from place to place. You cannot quantify, as I was saying, that it has to be depending on how much is the logistic cost. For different companies, it will be different. For different regions, it will be different. But we don't think of profiting from this.
Okay, fair enough. That aside, Mr. Bangur, good morning. Let's talk about the quarterly performance as well. Walk us through, how you expect your revenue figures to shape up going forward. What is going to be some of the key revenue drivers, and where you see your margins as well headed in light of this?
Revenue figures will definitely go up because the coal cost, which was there last year, because whenever we say revenue figure, we have to compare it from the last year. So the cement prices, as I was saying, will come down a little because of transportation cost, but that is not in our. So the revenues will definitely go up quite a lot because energy prices have increased. Because of the increased prices, even with the same margins, the analysts will feel that the margins have come down. If our costing goes up, the margins maintained, that is also very positive, but the margins will not be the same. 25% margin or 30% margin, which was earlier there, they have to gradually come down as the prices increase. So that is where the things are. Revenues up, margins down.
So what kind of margins would you be working with? You clocked in margins of close to 22% in the quarter gone by versus, as you said, close to 30%.
From 22, between 22 to 25% is what we think, because we are taking initiatives to control our power cost further. We are putting 100 megawatt of power, solar power, which we had said earlier, and it should now be completed within a month or so.
Okay. What is the overall demand scenario at the current juncture? Are you, do you see signs of being impacted due to the increasing competition, bigger players as well entering this space?
No, competition will always be there. Of course, they are very big players. They are very important players for Indian economy. But at the same time, as far as cement is there, the whole cement has gone from one player to another player. So till now, anything else is apprehension or guesswork. But right now, instead of Mr. A, Mr. B, firm or group A, group B will be running it. Earlier also, it was very strong international group, the biggest in the cement industry. Now it will be the biggest group of the Indian industry. So they are new entrant into the cement, but that doesn't mean the professionalism is very much there.
Bangur, that point is taken, but with the Adani Group entering the cement space and now suddenly becoming the number 2 players, how do you see the sector dynamics change? And for your own self, are you expecting some sort of market share loss? Is that something the street should be worried about?
No, market share may not be lost immediately. Once they consolidate, how they consolidate, if they take it from the other company, if they buy inorganic growth, then the total cement capacity will remain same and everybody's market share will remain same. Secondly, we have to understand that India is growing, the cement demand is growing at 7 to 8%. So there is enough space for everyone. Market share reduction is not on the cards. I don't think so.
Okay, sure enough. But talk to us about the entire setup as far as the industry is concerned, because the analysts are worried that the USP that Shree Cement had was that the EBITDA per ton was much higher than the peers. Over the last couple of years, we have seen this gap narrowing a tad bit. How do you see that going forward? Do you expect the gap to narrow further, or are you taking in measures to make sure that the EBITDA per ton and the gap it had versus the peers continues to be quite large?
In the commodity industry, you can be first. Uh, Gradually, the peers will understand what you are doing and will copy it. The margins will come, will be reduced. But again, as I was just saying, we are putting 100 megawatt of power plant solar, which should give us yearly 100 crores of benefit in terms of power and fuel cost. Not only that, it helps in reducing our or increasing our environmental score also. And many such initiatives will be continuously taken. We feel that our margins with the competitors will be little better again.
Good to hear. And sir, your commentary regarding the fact that there might be some price cuts is definitely something that some of these real estate players are liking, it seems, because the stocks like DLF, Sobha, all of these counters are gaining in trade. Perhaps they are anticipating that there might be some cuts coming in for the cement, prices as well. But also wanted to get your sense regarding your, capex which was lined up. You were looking at starting operations in some of your plants in Pune and Raipur. How is that progressing, and what would be the completion timeline on those?
Very good question. Pune, we have completed, started from 1st of February. So Pune plant is in operation. Raipur plant has also come under operation only about 15 days back. It is still under trial run. We have informed the stock exchanges that now it is ready. So it is but teething problems will be there for another 10 days or so. And both the plants are completed. So we are completing our plants as expected well in time.
All right, Mr. Bangur, it's been a pleasure interacting with you. Thank you for walking us through the impact of this move, as well as what we're expecting in terms of your new capacities, market share, and the current earnings.